2.5%, dragging the overall market sentiment. But let's move on. There's lots happening in the hydrocarbon, in the infrastructure space. A consortium led by L&T Hydrocarbons has won a big 7,000 crore order. The order is for 2 offshore packages from overseas clients. Subramaniam Sarma, the whole-time Director, Energy and CEO of L&T Hydrocarbon Engineering, joins us now to talk about that. Mr. Subramaniam, good morning. Happy New Year to you and your team at L&T. Thank you for being with us on the channel. Can you start by telling us about this order? It's a big one. And, when does it start to sort of flow through into your books? What kind of execution timelines are you looking at? And what is the overall potential that you see in this space?
Yeah, good morning, everyone, and Happy New Year to you also, everyone in the TV room there. Yeah, it's a large international contract, and it's a single contract. And this will be executed over a 3.5 years period. So I expect the revenues will start flowing into our books sometime maybe 6 to 9 months from now.
So when does what kind of margins will you make on this order? Just a little more details. I mean, financial numbers.
I mean, we are in the closed-in period, so I can't sort of give outlook on the margins, etc. But I think it will be pretty consistent with what we have been delivering over the last few years as a hydrocarbon business. It's in the same range.
Could you tell us if, so we have oil prices which have been booming, and this is in the midst of this wave, third, fourth, depending on where you are in the world. And many experts believe that once this ends, demand for oil is going to shoot up because there has been underinvestment for a variety of reasons. What does that mean for your business, the hydrocarbons business, in terms of ordering, etc., which you may see? What are you already seeing, hearing from potential clients?
Well, I think as we all know, I mean, the COVID had slowed down the capital expenditure into this industry. And combined with that, we had a huge focus on ESG and energy transition. So I think combination of that did sort of slow down the new capital. But slowly it is coming back. I would not say it is very, very sort of buoyant, but I think it is coming back. Definitely some few big customers have started spending. And the oil prices where they are now, plus 70, upwards of 70, north of 70, 80 in that range, I think does help because that helps the customers to plan their budget. But I would not say, I mean, there will be a spike in the short term, maybe $100 it might touch, I don't know, anybody's guess. But, the people take those capital expenditure decisions, keeping a medium-term, long-term view, because it takes almost 4 or 5 years for these investments to fructify. So nobody takes a decision based on short-term oil prices. It is always taken based on medium to long-term view. And I would say that the expenditure will not be at the same level as pre-COVID level, but it will slowly come back. And in combination with that, we'll have also capital coming into energy transition related projects. So I think the combination of that should bring us back to the pre-COVID level.
Actually, I'm interested more to understand what's happening in the renewable energy space because there seems to be a lot of traction there. You have recently announced a partnership with Renewable as well to explore opportunities there. What is the order book or order visibility like in this space? What is the kind of investments that you would have to make, say, over the next 1 to 2 years?
Well, I think these are very early days and it will be a bit premature to sort of put a number to the investment because everyone is sort of, I think the whole thing is evolving because currently, as you know, the green hydrogen and alternative sources of energy are much more expensive than conventional fossil fuel. So until that price parity comes or the cost parity comes, I think the demand pickup is going to be quite slow. However, the government of India is putting in a lot of stimulating policies, enabling policies which will help the capital expenditure to come. We expect progressively maybe $15–20 billion of capital coming into this over a say 3–4 years period of time, maybe even larger. And then our strategy has been to have a good sort of role play in that whole transition, because we have been, as L&T, we have been very much present in all facets of energy, and we have built a large infrastructure for India, so we don't want to miss out from that transition. So this partnership will position us quite well to sort of capitalize from any emerging opportunities. And so we'll have to wait and see. I mean, I think, but it's an interesting place, and it will sort of pan out as the situation evolves and the cost parity starts converging.
On that point, Mr. Sarma, you'd recently announced an agreement, an umbrella kind of agreement with Renew Power. We heard from Renew management a few days back, but not very much in terms of specifics is known. What exactly do you plan to do within that agreement that you've signed? It seems like an intent to work together. Could you give us any specifics? Has work started? Have you committed to anything?
No, I think work has started definitely, and we are working together to respond to some of the bids and the tenders which are now in the market, like the GAIL has, the IOCL has come out with an expression of interest, NTPC has come up with an expression of interest. So we are responding. There are some also some serious export letter of intents have come. Expression of interest have come. So we are responding to those, and case by case we'll have to see. We'll have to make those investment decisions. Basically, it's the intent is to develop those projects, because most of the projects in this space we believe will come on a build, own, operate basis. So we're looking at how to build the platform for that.
Okay, have you come up with any kind of target with Renew Power on how much capacity you plan to put on board? Because Renew Power themselves have added 300 megawatts of capacity recently. They've said that the total capacity addition is about 1.5 gigawatts in FY22. But the agreement that you and Renew Power have signed, have you all decided how much capacity you plan to put on board?
No, not really. I think it's something open-ended. We'll have to wait and watch and how things evolve. But it is not just for Renew Power. It is for full value chain. So we are looking at this collaboration is for building hydrogen and derivatives. So not specifically just for renewable energy. So that's the distinction. So if it is purely renewable energy, then Renew Power will continue to do what they are doing. Only when we have an opportunity where we need to build the entire value chain, that is renewable energy, hydrogen, and the derivatives, that's the time when the collaboration will kick in.
Okay, so since we have you with us, and there's a big event upon us, the union budget, wanted to ask you, what is your main ask from the government this time around, both for the hydrocarbon or even the power sector? What do you think the government can do to spur, to kickstart spending in this space?
I think two things. One is the input cost has gone up quite a bit in the last 12 months. I mean, particularly steel, cement, everything. I think we would expect some enabling policies from the government to bring a bit of a control on that. I think we have to remain competitive within the country as well as globally, because if the cost goes up, then the capital expenditure may go down, because I think at the end of the day, overall profitability of all these projects has to be evaluated by the customer as well. So I think that is one area I would sort of look forward to see whether there can be some policies to reduce the input cost. Second is that the GST regime. I think if the oil and gas industry is now currently outside the GST regime, I don't know whether that can be reconsidered, because that will free up some capital and stimulate growth in the industry. And there are other things, like now we are also anything which will promote exports, because we are doing a lot of export services. And I think anything which will stimulate and encourage export would be also welcome.
Just one last point. Without being very specific, I would understand that, since third quarter numbers will come out, you'd want to talk then. But given the level of ordering you're seeing, are you on track to meet that 13 to 15% growth guidance for the full year?
I can't comment on that. I mean, please understand that we are very much in the middle of the close-in period. So I think you'll have to wait for the results to come, which will be sometime, in a few weeks' time. So
Oh, okay, okay. All right.
Yeah.
No problem.
Yeah.
Thanks, Mr. Sarma. Appreciate you joining in, and thank you for sort of speaking with us about a variety of things. So L&T in the hydrocarbon space, winning, saying that they are starting to see clients spending in that space starting to come back. High oil prices giving clients confidence to plan budgets, which means more orders for L&T. So that's the stock there for you. Let's just take a very quick look at the market. So we've got, what, 50 points now at 18,260 is where the Nifty is at. Let's just take a look at the Bank Nifty as well before we go any further. The Bank Nifty is the one which had cracked quite a bit. It's down about 1/3%, which is 136 points. But no such problems for the Nifty so far. Infosys, the IT names is the Infosys stock, after getting to about 1930 in the futures, is at about 1903. So that is Infi. TCS is up about 1%, just under 1%. And I think Wipro, which is the laggard, is down 5%. So it's at about 657 or so. We'll take another quick break here. More on markets and more conversation on the renewable space and the investments which may be required to kind of power that renewable focused dream may need. We have the managements of IOC, CEEW, CEF and Edelweiss Financial Services joining us.